On June 15th, 2026, the 500 richest people on Earth added $336 billion to their fortunes in a single trading day, the largest single-day wealth gain ever recorded. At the end of this video, I'll tell you who lost the most that same day and why nobody noticed. Level 1. The entry. $1 billion, the number that gets you on the list, and the number that changes everything about how the system interacts with you. In 2026, there are 3,428 billionaires on the Forbes list. That is 400 more than last year. Together, they are worth $20.1 trillion, roughly the size of the world's third largest economy, added up and placed in the hands of a group that would fit inside a mid-sized football stadium. Here is the thing the number does not communicate. Most people who cross $1 billion do not feel it. Not because they lack the emotional capacity for it, because the money is not in an account where a balance notification arrives. It is in equity. The billionaire at level 1 is rich on paper in a way that depends entirely on a stock price remaining where it is, on a market that does not care about his preferences. He has $1 billion. He also has a phone that tells him how many of those billions are still there. The buyer at this level just had a liquidity event. He sold a portion of his company at a valuation that put his remaining stake over the threshold. He is now on the list. His life will change in ways he has not yet anticipated. Level 2. The working billionaire. $1 billion to $10 billion. The level at which most billionaires still work. Not because they have to. Because the companies they own are still companies they run. The founder-operator billionaire at this level is working harder than most of his employees, sleeping less, and spending more hours in the company than he did before the number crossed the threshold. Most of the wealth at level 2 is locked in the company's equity. The billionaire does not pay income tax on unrealized gains. The shares are worth billions. No tax event occurs until he sells, which creates a situation where a person worth $7 billion has a cash salary of $1 and uses loans against the value of his shares to fund his personal life. The interest on those loans is often lower than the capital gains rate he would pay if he sold. A man worth $7 billion with a $1 annual salary pays less in income tax than his assistant. Both of them are operating within the law. Only one of them has lawyers specifically employed to ensure this remains the case. Level 3. The diversified. $10 billion to $50 billion. Below this level, most of the wealth is in one asset, the company the person built or runs. Above it, the wealth has typically been partially converted into other things: a diversified investment portfolio, real estate across multiple markets, stakes in other private companies, a family office whose investment team manages assets across multiple asset classes simultaneously. The family office is the structural innovation that defines level 3. A private investment firm with exactly one client, this family. The investment team, the legal team, the tax team, the estate planning team, all employed full-time, reporting to the patriarch or matriarch, with a mandate to grow and preserve wealth across generations. Annual cost starts at approximately $1 to $2 million in scales, with complexity. It is a wealth preservation mechanism. Research consistently shows that 70% of family fortunes are lost by the second generation and 90% by the third. The family office exists specifically to fight that statistic. Level 4. The $100 billion club. In 2026, approximately 20 people have crossed this threshold. In 2017, the number was 0. The club did not exist. Every member of it created the entry conditions for membership within the last 9 years. A person at $100 billion who spent $1 million per day, every day, would run out of money in approximately 274 years. The spending problem is not solvable within a human lifetime. It is not even close to solvable. Jensen Huang of NVIDIA joined this club in 2026, driven by AI infrastructure demand that turned NVIDIA from a gaming chip company into the foundational hardware supplier for the technology that every major economy on Earth is currently racing to deploy. His fortune grew by hundreds of billions of dollars in 2 years. On any given day, the net worth of a $100 billion individual moves by billions of dollars in either direction based on stock market fluctuations that have nothing to do with any decision he made or any event in his company. On June 15, 2026, the day I mentioned in the hook, the 500 richest people on Earth collectively added $336 billion to their net worth in a single trading session. That is more than the annual GDP of most countries, created in one day by 500 people. Through share price movements, none of them did anything that day. No new company was built. No new product was sold. No new discovery was made. The number moved because markets moved, and the markets moved because of sentiment. And the sentiment was positive. And positive sentiment on that scale adds hundreds of billions of dollars to the net worth of people who were already the richest in the world. Level 5. The policy level. $50 billion to $200 billion. At level 5, the wealth becomes geopolitical, not because the person has sought political power. Some have, many have not. But because at $50 to $200 billion, the decisions made by one person about how to deploy capital have consequences at the scale of government policy. Where a person of this wealth chooses to build a factory determines which country gets the employment, the tax base, and the supply chain. Where they choose to not build one is equally consequential. Governments negotiate with people at this level. They offer incentives. They change regulations. They make exceptions. The buyer at this level does not think of themselves as a policy actor. They think of themselves as a person running a company. Amazon did not build its second headquarters in Virginia because Jeff Bezos wanted to influence Virginia politics. It built there because of a combination of talent, logistics, and incentives that the state of Virginia assembled specifically to attract it. Level 6. The first trillionaire. On June 12, 2026, Elon Musk became the first trillionaire in recorded human history. The SpaceX IPO, the largest initial public offering ever at $75 billion raised, pushed his stake in the company to a valuation that, combined with his Tesla shares and his other holdings, took his net worth above $1 trillion for the first time. At $1 million per day of spending, it would take approximately 2,739 years to deplete. The number is so large that it resists every intuitive comparison. It is approximately 5% of the United States' annual GDP. It is more than the GDP of Saudi Arabia. Musk's trillion is not liquid. It is not in an account. It is primarily in shares of companies whose prices fluctuate daily. On the day he crossed $1 trillion, he also had the capacity to cross back below it, and has in fact done so on subsequent days depending on market conditions. Level 7. The inversion. And the answer. And here is the answer to the question from the hook. On June 15, 2026, who lost the most? Elon Musk. His net worth declined by approximately $24 billion that same day due to Tesla share movements that offset his gains elsewhere. He lost $24 billion in one day. Nobody noticed. The billionaire at level 1 checks the phone every 15 minutes. The movement of a few $1,000,000 in either direction affects his mood, his decisions, and his conversations with the people around him. The wealth is still close enough to a human scale that it can be felt. By level 7, the trillion, the number has become so large that it no longer affects the person proportionally. A $24 billion loss in a single day is mathematically a 2.4% decline from $1 trillion. For a person with $100,000 in savings, a 2.4% decline is $2,400. For Musk, $24 billion in a single day is a rounding error in the context of the month's movement. This is the thing the Forbes list was never designed to show. The number at the top grows in a way that eventually exceeds the human nervous system's ability to register it as significant. The person at level 1 feels rich because the numbers are still connected to something his nervous system can interpret. The person at level 7 has a number that has grown past the range where it produces any sensation he hasn't already had. 3,428 people on a list, $20.1 trillion between them, a single trading day that added $336 billion. A single trillionaire whose wealth declined by $24 billion that same week and who did not change his behavior in response. The billion was the milestone. The trillion was the proof that the milestone was never a destination.